So, welcome to the first episode of the Small Business Advice Show, hosted by myself, Dan. I'm an accountant with about a year and a half worth of experience working with small businesses, just helping them grow and just being there when they need the help. And co-hosted by my friend Andy.
Yeah, chartered accountant with about 15 years of experience. Typically, I've just helped small businesses over those years with, all sorts of things, compliance, cash flow, growing, and then just down to the absolute rudimentary, boring stuff. But, we're going to talk about the exciting stuff on this. So.
Yeah, absolutely. And as the name suggests, all we're trying to do is just help small businesses become successful, just from starting out to growing it out further. Also try and help business owners make the most out of what they have. We'll bring in other business owners as guests, talk about their experiences, their story, some of their mistakes as well. And we'll also try and bring in some experts into the field just to talk about just some things surrounding business owners and just how to best grow and do it sustainably as well.
Yeah, perfect. So, today's episode will go into, what is it, starting a business, how do you do it, a few things around that. The cost of starting something up, people get quite eager, they go jump in, start the business, but don't really understand the costs. What are we looking at when we start fresh?
Yeah, absolutely. So starting a business is obviously the startup cost, depending on what structure you go with. Mainly the setup fees would be usually your accounting fees as well. Yeah. Also fees for any branding, depending on your type of business, what industry you're in. There'll also be legal fees as well that you need to have sorted out. And then on top of that, even when the business starts running, you'll also have ongoing fees as well. So that's got everything to do with activity statements, keeping the company registered, but we'll go into that in a bit further detail.
So choosing a business entity, we've got lots of options. The main ones we see are sole traders, companies, partnerships, trusts, both discretionary and unit trusts. Each has pros and cons, which, we'll spend a whole episode on structures themselves. But, most people will come in, they'll start as a sole trader. If they've got a business partner, they'll probably start as a partnership or a company. It's always good to get some advice initially, figure out what's going to suit you for the circumstances. And just get it right from the start. The more complex you go, doesn't mean it's going to be any better. You want to keep it simple, but relevant to what you've got.
Yeah, absolutely. And there's obviously different structures depending on what you're doing, depending on what your goals are as well. If you're planning on to franchise out or if you're planning on to selling the company moving forward, there's a lot of different structures to go with. But it's important to note that it's good to stay flexible just in case things change, conditions can change.
Yeah.
Your goals may change over the years as well. So there's no need to have it too complex, but the best thing to do is just have that flexibility, be able to change when you need to. But there's just some things to keep an eye out for when you're looking at the structure as well. It's something good to get right from the start.
Yeah, absolutely.
But yeah, absolutely something to sort of consider when you're looking at starting a business and especially your goals with it as well.
Yeah, I think get the advice up front. It's going to cost you a bit to get the advice, but the cost, I think, is well worth the investment because if you get it wrong, the cost of that is far outweighs the cost of just getting the advice. So
yeah, absolutely. A few $100s with a meeting or getting some advice can save you thousands in the long run. And yeah, it's definitely important, especially to know what you're dealing with as well. Also, be involved in that situation as well. Don't let someone else just do it all for you. You've got no idea because it just makes it more complex for you.
Yeah, and another good point is like if you're with your advisor, lawyer, accountant, whoever it is, and you're talking about what structure should I set up with, pros and cons, all that sort of stuff. If you're not sure of anything, make sure you ask. Don't feel stupid. The worst thing you can do is just go, okay. Like ask the question if you don't understand. That's what they're there for. So,
absolutely.
Get that advice. So, one of the things that people look at when they're setting up a structure is how do I minimize risk, right? So, company being a separate legal entity will minimize risk to a certain extent, but not every entity has that sort of ability to do that. So, some of the insurances that we commonly see, public liability, professional indemnity, business interruption, they're all mitigating risks of certain types. And, sleep at night factor comes into play.
Yeah, absolutely. Also, work cover is a big one as well.
Work cover.
Especially if you've got employees. But not only, you don't have to have employees to have work cover. You can be just the only employee or the sole director if you have a company you need the work cover insurance. It just kind of protects you, sort of, if someone gets injured, or if you get injured, if you get sick, it's there. And it's also mandatory as well for any company to have. So that's another one you need to keep an eye out for, and something to make sure you have. Not only is it you need it, but it's also important to have, as you said, that mitigate that risk, and just to be able to sleep knowing that, you know, everything's fine.
That's right.
In case something happens, which can happen all the time. So.
Yeah, exactly right. You know, I'd rather pay some insurance and be able to sleep at night knowing I'm going to be covered. So managing risk is one thing, but then the flexibility that comes with, you know, starting your own business, being the owner operator. You know, I think there sometimes is a myth that you get more flexibility. I would argue that it's not more flexibility. The decisions are on you, and there is flexibility there, but I think it's just a different mindset. You know, like what are your thoughts?
Yeah, absolutely. Well, when you're owning or starting a business, you're moving from being an employee where your work's always there. You don't have to worry about having, you know, a certain amount of work ahead of time for the next couple of weeks to help have that cash flow going. But now you're shifting from that employee mindset to the employer mindset, where you've sort of got to think about it not as if you're just going to work doing your 9 to 5 and that's it. There's more to it, and a lot of people think starting a business you'll have all this flexibility. You can work your own hours and work from wherever, obviously depending on the industry, but it's not really like that. It's quite difficult, and you know, as you've mentioned it previously, that it's never an easy line up. There's a lot of ups and downs, and it's quite difficult at the start especially.
Yeah. I don't think I've ever heard anyone say it's an easy ride.
No, absolutely not.
But no, I think it is a different mindset. Like the ownership mindset is definitely present. You know, like when you go from employee to, okay, I start at 9, leave at 5, and then you're just off the clock. But as an owner, I think it's completely different. You know, you might leave the office, but you'll be thinking, okay, well, what have I got to do to sort that employee? Oh, I've got that issue I've got to sort tomorrow morning. Oh, I've got a supplier call straight away. Like, it's a chaotic mind to be in, but it's, you know, there's benefits as well. So.
Yeah, absolutely. And not to make it sound daunting, but obviously you need the income for yourself, obviously to pay yourself. You also need the income for your employees to pay them, because they obviously have to feed their families. They've got bills to pay, and sort of the pressure is a bit on you at that point. And you know, if you don't have enough work coming in to keep your employees employed, it's quite stressful, and it doesn't mean that you're going to have all this flexibility and all this freedom. And you know, it's not always going to be great, but when it is, it can be very rewarding. So obviously there's its negatives and positives, but it's important to know ahead of time that starting a business won't be that easy, and it may not be for everyone, but you know, if you give it a try, at least you sort of know what you're up against, and you should be aware of those situations.
Yeah, and I think if things go wrong, you're the first one not to get paid, right? So like keeping that in mind. But also, most businesses, I think the expectation's got to be that, you know, it'll take between 1 and 3 years to get to a point where you're paying yourself probably market salary. Before that, like in very limited circumstances, you are making more than you were before as an employee, and that's just part of the, you know, the cost of doing your own thing to reap the rewards long term. So.
Yeah, absolutely.
Ongoing costs. So, I mean, you know, other than our standard, you know, cost of goods sold, you know, for a services firm, it'll be, you know, staff salaries. If we're a product firm, it'll be product costs. You know, what are some of the other things we might not be aware of when starting a business?
Yeah, absolutely. So from a tax perspective, which myself and Andy are quite involved in, there's going to be things called activity statements. So if you've never heard of them before, it's usually done on a quarterly basis, but can be done on a monthly basis as well. It's mainly to help pay taxes such as GST, pay-as-you-go withheld, pay-as-you-go installments, sometimes FBT installments as well, and we'll go into a bit more detail on them further on in a different episode. But as a holistic view of what activity statements are, it's pretty much, for example, for GST, business will have to charge GST on their sales. They'll also pay GST on expenses. That's usually 10%. The difference in that needs to be paid. So for example, you made $100 in sales and GST was charged on that, so the $10 in GST, and you did $50 in expenses. The difference in that, which will be $5, needs to be paid to the ATO. A lot of people aren't aware of that, especially my friends included that wanted to start businesses. They'd have no idea what an activity statement is, and that's usually done on a quarterly basis, can be done monthly as well. And that's just a tax that business have to pay, which a lot of people aren't aware of.
Yeah, and I think it causes a lot of cash flow problems, right? Like 3-6 months down the track, they're think they're doing really well. They've bought all these things, and then they go, oh, what's this? Like, I haven't accounted for this. So keeping in mind from the get-go that you're putting away 10% on your sales, and yes, you'll get your 10% back on your expenses, or most of them. But general rule of thumb is, for someone new in business, we recommend, that 10%, put it away. Don't worry about the expenses that you're getting 10% back on.
Yeah.
Just leaves a little bit of a buffer. And we'll go a bit more into that, but there are certain services and goods that don't attract GST, but as a general point of view, put that 10% away.
Yeah, absolutely. On top of GST, there's also pay-as-you-go withheld. So if you're paying yourself a wage, or if you've got employees that you're paying them a wage, you might be actually only transferring them a certain amount of money, but you actually have to pay a tax on the wage that you file with the ATO. So obviously, depending on how much they get paid, they'll be considered pay-as-you-go withheld. So that can be done quarterly or a monthly basis as well. And that's pretty much more tax that gets paid to the ATO, which covers the tax for the employees. So just their tax on their wages.
Yeah, exactly. And then superannuation's a big one, because there are such strict requirements around A, how much you have to put aside, and B, how soon you have to pay it, right? So that's a big one where you can get in trouble. We've seen the ATO over the last few months, or even over the last year, going really hard on people that aren't paying on time.
Absolutely.
So that one's one you really want to keep an eye on. Make sure you pay it on time, remit it properly, and report it properly through single touch payroll, which is a whole nother thing to discuss.
And definitely something that if you're not fully aware of, and don't know exactly how to go about it, make sure you seek the right advice, just because it can catch you off guard. And fees by the ATO, not only will they charge interest for late fees, they also charge penalties. You can get penalty notices for the directors of the company. There's a lot of taxes and other fees that are associated with you just paying them late, because not only do you have to pay them, but you got to make sure you pay them on time, and factor that in as well with your cash flow, because it can you can get caught out quite easily.
Yeah, absolutely. And then paying yourself, obviously there's a few different ways you can do it. Directors' fees, wages, dividends if you're a company, trust distributions. So multitude of ways you can do it, as long as you make sure you're putting away enough tax, paying the super where it's required. That's the main thing when it comes to paying yourself.
Yeah, absolutely. And especially, as you mentioned, for a trust distribution, if that's going to get distributed at the end of the year, you may have not actually paid any pay-as-you-go withheld throughout the year. So you might have, for example, a $100,000 distribution from your trust going to yourself. When you're doing your own tax return, because you haven't actually paid any tax throughout the year, you'll be slapped with a big tax bill, because you pretty much haven't paid ahead of time the tax that you've kind of on the income that you've made. And that's just something also to keep an eye out for. And that can be mitigated with pay-as-you-go installments, which is pretty much prepayments of your tax throughout the quarters. But there's a lot of different strategies to help minimize that. The best way to go about distributions, or even just paying yourself wages, just so you pay those pay-as-you-go withholding throughout the year.
Yeah, I think a good point for back to the structuring discussion, right? So like we've got clients and like people just in general, if they operate through a trust structure and they don't draw any money during the year, but there's a taxable profit or an accounting profit at the end of the year and it gets distributed to them and they've got to pay tax on it, and they'll go, well, I didn't receive anything or whatever. That's a great reason to discuss the structure and what structure is right for you, because a trust at the end of the year can't retain profits, has to pay them out. And if that means you're on the top marginal tax rate, well, there goes 50 cents in the dollar basically. Why structuring is just paramount.
Absolutely. And on that, with the trust distributions where you're getting paid on the marginal tax rate, there's also things to consider. If you're in a company where the company has to pay the tax, they're just on a flat 25% rate, depending on if they're a base rate entity or not, but we'll go into that further on.
We'll do a whole episode on structuring for sure. There's so much there.
It just gets very complex, but just depending on what tax the company's on, what marginal rate you're on, there can be a lot of ways to save on tax as well, and that's why structuring again is really important.
So structuring, getting a tax plan with your accountant, absolutely great things you can do to minimise those or optimise your tax position basically. Other ongoing costs, you've got your overheads, rents, subscriptions, marketing, all that sort of stuff. So I think what you want to do is when you get into business, figure out what am I going to earn over the next 12 months? What is my estimated costs? Set your budget, track it monthly, if not more often. Xero does that really well. We use Xero for most of our clients and recommend it. So Xero, if you're using that. if at a personal level, so 0 for the business, but at a personal level, you know, you've brought up Pocketsmith before.
Yeah,
Great
yeah.
budgeting tool.
Absolutely. It can be a bit daunting, but it's obviously only as complicated as you make it to be. You don't have to. Sometimes a lot of people go very into the nitty gritty, and
Yeah.
they end up spending a lot of time on this admin work when
Yeah.
you know maybe you might not need it at the time, or maybe it's something that you need later on. But you can, you know, it's only as hard as you make it. You can keep it very simple, but obviously keeping it so simple sometimes has its drawbacks. Might not have enough data to be able to understand what's happening in the business,
Yeah.
how much work you've got going. But then at the same time, it might be just too much work, taking time off your work that you could be, you know, utilizing somewhere else and being able to prioritize what's right.
Yeah.
But yeah, it's definitely something important to have a good system in place just to make sure you're aware of those costs. You're kind of aware what to price your products or your services at, just because you know what your expenses are. So that's very important, as you mentioned.
Yeah, yeah. So I think doing it all, and you know, you can do probably a lot on your own, or with research and resources out there. So you know, set your budget, find out your break-even point, make sure you've got your gross margins and everything right, your markups are right, and then that way you'll hopefully avoid headaches down the track. So.
Yeah, absolutely.
Common mistakes to avoid, you know, I think we've touched on a few, you know, not putting away for your taxes, your super, your GST, those are some of the main ones. You know, any others that we should keep an eye out for?
Yeah, absolutely. Just making sure you plan ahead for them as well.
Yeah.
I mean, I think it's the best to be able to be ahead. If you have everything done sort of on time, you're not rushing at the last minute to make lodgements and then amounts becoming overdue, you have interest charged on them, etc. But there's a lot of those things that people would kind of just leave to the last minute, or they don't really pay much attention until they're due, and then all of a sudden you're slapped with a massive tax bill or a massive, you know, whatever. So yeah, definitely something to keep an eye out on. But yeah, other than that, it's really just other registrations.
Yeah, just making sure you're registered, got the right licenses. I'd say getting accounting software from the get-go, or at least a spreadsheet, just something.
Yeah, yeah.
How often we find that people come in and they've just scattered and they lose so many deductions because they didn't track it, right?
Yeah,
so simple as a spreadsheet.
Yeah,
just something.
Especially for a business. I mean, if you don't have one, you're really doing yourself a mischief or misjustice. But
yeah, that's right.
Absolutely need one, just because it helps you see it visually as well. I mean, you know, some people can really just have it all in the back of their mind and it works, but I mean, if the company grows anymore, the business grows anymore, it's just becomes so hard to track it all. It's really important to have kind of that data there, especially that you can visualize it so you can see. But it's definitely important to have it all organized like that.
Yeah, and I think if you're on something already like the Pocketsmith or whatever, something similar, like it has the functionality to flag it as a tax item. So at least that's better than nothing, right?
Yeah, yeah, especially for individuals, you know.
Yeah.
It's good to have. But yeah, for businesses, I think it's essential to have some sort of accounting system.
Absolutely. So that's pretty much it for our first episode. Covering off, I guess, the main things, just, you know, make sure you understand what the costs are up front, structure, have that discussion with your accountant, understanding all the ongoing costs, common mistakes, make sure you're insured, got everything set up and ready to go. I think we can deep dive much further into all of that stuff over the next few weeks and months. And
well, absolutely. We'll have a series going that kind of goes into breaking down more detail, especially structuring tax. I know sometimes it can be not that exciting, but it is good to know. We'll also bring in, you know, other small business owners, other experts in the field. Also bring in some experts with super as well for individuals. And obviously that can tie in with the business and the whole group, especially for family groups. But yeah, we'll definitely go into it a lot more detail. And if there's obviously anything people want to discuss or want us to discuss about, make sure to let us know. And then, we can bring it up in a podcast, do a bit of a deep dive and break down any myths and any questions people have.
Absolutely. All right, cool. Well, we'll see you on the next one, hey?
Yeah, absolutely. Thanks.